Hey everyone, and welcome to Earnings Cheat Sheet for Friday, August 29th. It's Alexis Garcia and Ed Carson here, and we're going to break down some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, we've gotten through NVIDIA earnings, but what's on your plate for this week?
Yeah, a couple more AI plays, Broadcom and Credo Technology, and also Dollar Tree.
Yeah, I think we'll cover the spectrum here on this episode, but let's start with Broadcom, which is scheduled to announce fiscal Q3 earnings on Thursday, September 4th. Earnings for the chipmaker are projected to rise 34% to 166 per share, and revenue is seen climbing 21% to $15.82 billion. And here's why we're watching Broadcom. There's going to be focus on the AI chip business and related networking products. And even though it has plenty of software stuff to add, that AI chip business is going to be in focus. And we all know, AI spending has come under scrutiny as of late, but analysts at Citigroup say there's more to Broadcom's growth story than just AI, and they're really encouraged by the deepening ties that Broadcom is showing with partners like Meta, like Google, like TikTok's ByteDance. So, what are you thinking in terms of Broadcom earnings and why they're important?
Yeah, I mean, Broadcom, it's not just that they're in AI chips, the custom AI chip has become pretty popular. And that's one reason why it's taken off so well. Growth has been accelerating, or at least we're very strong for on the earnings side. And it is interesting because Broadcom has a lot of security software and other software things, but everybody's really a lot of stuff on the AI, and just seeing how that's all going. Can this sort of like become outpace NVIDIA, which has the sort of the basic GPUs? Not that there's anything basic about NVIDIA AIs, but still, just see if that momentum can continue.
All right, Ed. Well, let's see if they can keep the pace, technically speaking, here on the chart. We're looking at the daily here. And, again, it looks like Broadcom was really testing this 21-day line, but has moved above that with a 2.8% gain on Thursday, August 28th. So, talk to me about your thoughts on this chart.
Well, I mean, it was a nice bounce off the 50-day line. And look, if it weren't for earnings coming up, that would have been actionable. As it turned out, if you bought right on the 50-day line, you'd probably have close to a 10% cushion, or at least pretty close to it. But at this point, strong action. I'm not sure what people can do with it. It reacted well to NVIDIA's earnings. While NVIDIA is down, Broadcom clearly did better among the main AI chip names, so far. So I think it just needs to settle down and base for a little while. I'm not sure if it'll do that. I mean, it'll either take off on earnings or maybe tumble on earnings, but something maybe a gradual pullback to at least the 21-day line, or maybe even the 50-day, 10-week line, maybe creating a new base would be ideal, but it just may not happen. I mean, it just may not.
And, for investors that got back in on this base here, definitely this week here, while it flirted with that 10-week line, I mean, was that a time to lock in partial profits, or how are you kind of seeing if you're in this, how would you maybe be trying to manage that position?
I mean, I can understand, especially if you were very AI exposed, you could have chosen to take some partial profits in some names, including Broadcom, though Broadcom never went underneath really the 10-week line. I think you definitely could have held all of that if at that point. It's just a matter of the concentration, if you're a swing trader, your conviction of the name. But yeah, it's acting very well. People who are existing holders from any decent buy point are in good shape here.
And while we're here on the weekly, Ed, we can see that accelerating growth looking like it might slow down here this quarter, but solid earnings and revenue numbers here. So, is there anything else jumping out to you about the fundamentals?
Yeah, solid. Obviously, want to see if they can pick it up, like continue to maintain really solid growth on the earnings front. But yeah, this is doing very well. Definitely, investors should be paying attention to this name.
All right, well, let's move on and take a look at Credo Technology Group, which will report fiscal Q1 earnings on Wednesday, September 3rd. Earnings for the data infrastructure company are expected to climb 775% to 35 cents per share, and revenue is projected to rise 32% to $190.6 million. And here's why we're watching Credo. Again, we're going to be looking for any sales commentary regarding AI data center build out. It's a really big product that interconnects the AI servers and scaling data centers. Amazon, Microsoft, and Elon Musk XAI are its top three customers. So some big hyperscalers involved there, Ed. And in terms of Credo, it recently launched a new platform that's supposed to enhance the company's diagnostic and analytic capabilities when it comes to these data centers. Analysts are seeing that it positions it for future revenue growth. But what's on your mind with Credo?
Yeah, Credo's been growing just like crazy growth. I mean, at some point, the law of numbers are going to slow that down. But another AI data center play, just huge, huge gains over the last several months. And, again, yeah, the growth is going to slow down at some point, but definitely one of the big winners over the last several months.
Yeah, we're on the daily chart here, Ed. And, Credo has been up roughly about 80% so far this year. And we just see the strength over the last couple of weeks, all these blue bars here reaching these new highs. So, again, in terms of your approach to handling this, what are you looking for in terms of the setup here?
Yeah, I don't see anything that's coming up in the near horizon. You could have bought it off the 50-day line. Wasn't a lot of time before earnings, but as it turned out, plenty of time to build a cushion. It's already well above that, probably like 25%. Or well, it was around 100, so it's about 30% above that 50-day line test. So anybody who bought there still has plenty of cushion already. But it's really extended from the 50-day line. This is a tiny consolidation it cleared. I just think that it's going to need time to rest or take a break before the new buying opportunity. It may not rest, but you'd want to see some kind of pullback to the 10-week line or a new base or some combination of the two. But anybody who owns it, I mean, pretty much anybody who bought it, and anything since more than a week ago is probably pretty happy with things and can let that one ride.
And you can see we're on the weekly here. The run it's really had since hitting these lows during the year here back in April. And of course, there was a lot of deep seek stuff. There was a lot of concern about AI spending. We had tariffs, but looks like it's really been on a tear since then. That RS line looking pretty good as well. Uh, and again, as you mentioned, the growth numbers really impressive here. You can see these EPS numbers. What else might be jumping out to you about Credo's fundamentals?
I mean, one thing is we already know that Meta and some of the other hyperscalers, a lot of the ones that are the customers, they're spending like crazy. They said that in the last earnings report. So we know that. So some of that is expected. So I think that would be one thing is that you probably want to see them beating views to really get that would be there's always the potential for the downside because we know that the results are going to be good. I mean, that would be the only thing is, and we've had so many earnings reports. At what point people, will miss the whisper number? And I'm not saying it will. It may just blow it out again. But that would be the one thing. And that's one reason why we talk about not buying extended because you don't know. This has done great, great, great. But yeah, could this fall 20% on earnings? Yeah. Yeah, it could. I mean, that's why we talk about those things. But just tremendous growth. I mean, this is what we talk. Sometimes we talk about growth stories. This is growth. It's not just a story. This is real. It's very real. This triple digit growth. It doesn't get much better than that.
All right. Well, let's move on from the AI play here, Ed, and take a look at Dollar Tree, which is scheduled to report on Wednesday, September 3rd. The discount retailer is expected to see Q2 earnings fall 39% to 41 cents per share. And revenue is also expected to decline 39% to $4.48 billion. But that looks like it may be up 10% adjusted for the now sold Family Dollar brand. And here's why we're watching Dollar Tree. We're going to want to know how Dollar Tree is handling tariffs. Are consumers trading down? Dollar Tree did just report a big increase in those trading down customers. And we're also going to want to see what their post Family Dollar plans are. And also on the horizon, Dollar Tree and Uber just reached a deal that adds Dollar Tree products to Uber Eats. So, Ed, in its Q1 earnings report, Dollar Tree executives did comment that they did expect some earnings volatility in the near term. That's probably due to tariffs. But what are your thoughts here?
Yeah, I mean, with a lot of discounters, they have that mix. Tariffs are going to push the cost of goods up, and there's not necessarily a lot of margin for it. On the other hand, you're having trade down customers, and people are going to shop. So if they can't afford the bargain name, So it does seem like it can be an opportunity in these tough times, like in uncertain times. Uh, Rival Dollar General just reported its biggest trade down number of customers in years. That one stock is sort of hanging out there. We've seen some names. Discounters have been hit or miss with earnings around right now, so it's not clear. Some are doing very well. Dollar Tree has maybe gone on a nice run, earning stock wise, but the earnings are still just sort of so. I think there's just you're not going to expect massive. It's already gone on a good run, so that would be one question I'd say is that the earnings growth is okay, but you're just not going to. We just talked about Credo having triple-digit growth. We are not going to see triple-digit growth from Dollar Tree, barring at some point there might be some easy comparison. There might be some wild quarter, but clearly this is a slower growth phase. That doesn't mean it can't go on decent runs. It obviously has, but it's just something to keep in mind. Just calibrate your expectations.
And we are on the daily here, Ed. And as you mentioned, nice run since this breakout in April from a 79.80 buy point. But looking like, those 10-day and 21-day lines converging, looking for support here, and that 50-day line kind of slowly catching up. So give me your thoughts on the chart action here.
Yeah, if you go to a weekly, it's the 10-week line is getting even closer. There's a 3 weeks tight or in there, and that over a week or two that could develop into a new base. It would need another week, so it may not have that opportunity. But it's basically, I would think, if it can rebound off the 10-week line or if it can clear this area, that'd probably be a buying opportunity. A little longer would be better. Uh, but I definitely want to be waiting for earnings. But this one, there's some opportunities that are developing that may or may not pan out. And during the spring upswing, there were some good volume weeks. You saw some spikes in there as we bounded off the lows, and so that was showing some force in there. But volume has dried up in the last few weeks, which is probably pretty good, just as it's consolidating.
All right, Ed. Well, those were some of the big names on our radar, but let's take a look at a few more. There's always more to cover. So let's look at Salesforce. They post earnings on September 3rd. We're still on the weekly here, but talk to me here, Ed. Again, it looks like we've got 3 weeks of gains here, still trading below the 10-week line and well below the 40-week moving average.
This one has a lot of work to do, unless it gaps above the 200-day line. And even then, personally, I usually would want to wait and see if it can hold those gains. It's got work to do, but it's important for the software industry because we are seeing some signs in the past week. Hey, some names are having some strong earnings, like gapping up. So maybe software is going to make a comeback. This one may not lead, but at least you'd like to see this name not lag so much. So it's important from that perspective.
All right, let's take a look at Zscaler due on September 2nd. Thoughts here on the chart.
If you can move above the 50-day line, that could potentially do a buying opportunity. You'd like to see the 50-day line being on the upswing, and that's not going to be the case, presumably. If it came up through there, but nonetheless, that would be a potentially actionable through there.
All right, another software name, as you mentioned, Guidewire Software expected to release earnings on September 4th. Again, this one kind of the same, trading below that 50-day line. So, what are your thoughts here on the technical action?
Yeah, I mean, again, if it gets through the 50-day line, I'd say maybe basically 230. There was a high from a few weeks ago. That would seem like an area that maybe would be actionable. This is an insurance underwriting software company, so it's tied to the insurance industry fairly well. The growth is really strong. I'd also note that the last earnings report was really strong. Then it held up for a couple of days, but then it gradually faded and faded and faded. And part of that maybe software was. But this is one reason why we sometimes, I personally like to wait with gap ups because you just don't know if they're going to hold. This has given up all those gains. And there's been some of that. It does have a tendency to gap up on earnings. Sometimes it holds, sometimes it doesn't.
All right, Ed. Well, last week we looked at Abercrombie and Fitch. This week, let's look at American Eagle. They're on deck for earnings this week on September 3rd. And again, this one looks like it's trying to come off the bottom here and looking to move above this 200-day moving average.
Yeah, I mean, is there going to be that Sydney Sweeney effect, or will there be reports of it? Because it may not even be in these results, because the results are going to be for the July quarter. I don't know if there would be enough in there, so that'll be interesting. gets above the 200-day line, I don't know, maybe there's something. I mean, earnings are not supposed to be good this year. So you'd be doing this as a turnaround play. It's a turnaround play when the consumer doesn't feel so strong right now. So I don't know. That would be, you'd really have to feel confident that this is going to stay trendy because we're seeing some other, because retailers can really sell off hard if they come out of style, especially in a more uncertain environment.
All right, how about we take a look at a data center construction play that's Argon Incorporated, earnings there on September 4th. And again, this one had a nice move above that 50-day line, moved above the 21-day line after this kind of failed breakout attempt here on July 31st. So give me your thoughts here.
Yeah, you probably could have, this almost looks actual now from a trend line from that high down, but I just feel with earnings coming up, that just raises too much risk. This because it's nice to have that early entry given that, saw that recent failure from there. It's basically, I think maybe on a weekly, it might even have a new flat base, but you could pretty much, that looks like yeah, it looks like that'll probably be shallow enough. So you'd have a flat base after this week. So the recent high would be the new buy point, but anywhere in there could be something actionable. Uh, again, it's another. It's good. Glad you pointed out it's AI. You can have a whole bunch of different groups, but if they're all the same theme, there's always the danger of getting huge wipeouts on one day. But this has been a top group, and it's a definitely interesting stock here.
Yeah, definitely one to watch. And Ed, what about we look at China EV maker NIO? Earnings there due on September 2nd. And, we've been hearing a lot about the increased competition in the EV market there in China. And this one definitely, I don't think, is the leader there, but looking like some strong action here over the last couple days, trying to come up off this bottom. So, thoughts here with NIO and what you're going to be looking for.
I mean, yeah, I want to see if there's strength and what are they going to do for guidance because it's there's a lot of excitement about this new mainstream Envo brand SUV that's come out, and supposedly they are finally going to have big production when they launch because that's always been the problem for Neo that they will launch a product and then they just can't make many of them for a while, and it just for whatever reason. So this is a long, long, long slump. I would like to see it maybe rally more, then form a new base if you feel a little bit more confident because there's a lot of overhead resistance, even in just the last 18 months. And then, of course, always the question, can they sustain that? Because it's so competitive. But Neo, after a long time, seems like it's on the upswing. So it'll be more interesting for EV watchers rather than the stock, at least at this point, I think.
All right. Well, let's wrap with Aero Environment earnings. I don't know if they're going to be next week, but they're certainly coming up. Looks like they might be on September 9th, but definitely one we want to talk about here, Ed. And so, talk to me about this chart again. We're still on the weekly. It's had a break below the 10-week moving average, but looks like it's maybe trying to find its way back above that. But give me your thoughts here.
Yeah, so that one is gonna report September 9th, so probably the week after, but yeah, this one, if you can rebound above the 10-week line, maybe there'd be some kind of trend line. If it moved up, there would be a new base too. If it built the right side, a base would start showing up on pattern rec. So there would be this one had a big gain. It's volatile, but one to be watching that way. Could we scroll down just on the earnings? I'm just not sure about the pattern here. It's choppy. That's one other issue is that there's some big revenue growth seen, so that's really positive. But the earnings are choppy, and I don't know why it's so choppy. But that's just something to note. So you can't, you never quite know what you're going to get out of that. The stock tends to make huge moves. Just looking to see, there are huge moves around earnings. Those earnings weeks, some of them have been great, and some of them have been terrible, but they are pretty easy to spot on this chart. So I'd want to have a cushion in this. I wouldn't want to be buying it and have a 2% cushion heading into earnings because of that risk that you could have a 20% drop. That is very real with this stock.
All right, Ed. Well, thank you so much for your insights today. And, that wraps it up for this season of Earnings Cheat Sheet. Of course, if you want more market analysis, you can always tune into Stock Market Today. That goes live after the closing bell daily. And thank you so much for watching, and we'll see you all next earnings season.